Hey there, traders. What's going on? Jamie Setley here. It is April 2nd, 2020. Today's video, we are going to take a look at crude oil and the Canadian dollar. Um, there are a lot of things that we could look at right now. There's, plenty of things that are moving. Obviously, that was quite a change from what was happening even a couple of months ago, right? But now we've got vol in FX, obviously in equities, and most notably here recently is massive volatility in energies. So let's start with crude oil. This chart actually, and what I'm going to talk about here was a chart that was published yesterday, and I talked about being bullish crude oil. Okay, right at yesterday's low, today crude oil was up over 20%. At one point, I think we were, 30 something percent on the upside. Do think that we could probably go a little bit higher. I'm going to talk about that right here. And keep in mind the goal with these videos is not just, strategy video, but also educational video. So I was always a proponent, for myself, I always kind of learn by doing. Right? You think of classes or something, examples, right, rather than theory. And that's what this is. A lot of this is going to be. I'm going to show you examples working in real time, and hopefully over time you'll be able to apply this to your methodology or incorporate various parts of the various methods that I employ, and hopefully it can help you in your trading and in your analysis. All right, so first off, this is a very long-term chart of crude oil. And it's fascinating to me how well these very long-term observations or levels work. Okay, a lot of people want to zoom in on the 5-minute, 10-minute, hourly chart, whatever. There's certainly a time and a place for that, but I do think it's important to understand where you are in the bigger picture before diving into those micro time frames. So this is not something that was drawn up yesterday by any means either. This is something that I've been following for many years. The idea of trend line analysis is to really identify the angle that a market is trading on. Okay, so not just that one line, but parallels to that line. Okay, so you can see here we have a line from the 1986 low to the 2001 low. All right, that nailed support back in Jan 2016. The 2014-2016 period really was a huge crisis period um, in oil and gas, right? It was a big, strong dollar period, of course. It was, many sectors have not recovered from that, notably oil and gas. You're starting to see a lot of different bankruptcies come through right now for some of the shale drillers here in the U.S. But let's just look at the various parallels to this line. So the center line has been a spot of major importance for many years, right? Basing around it, using it as a point of reference, maybe not necessarily a specific precise level to trade against, although it was right in the financial crisis here in '09. Okay, and look what happened when we broke below it here just about a month ago, or about 5 weeks ago, right? We fell apart. Now, here is what I consider the upper parallel of this channel. Okay, it was resistance. Okay, that would be the lower parallel, the red. Now, the next step in kind of this channeling lesson, if you want to call it that, would be channel extensions. So you can see that the magenta line here, okay, is half the distance of this channel. So center line to the upper parallel, okay? You're going to extend that width, and you're going to come up with the magenta line here. We're going to extend it from the bottom, and we're going to come up with this parallel right here, all right? One of the main principles in channel analysis, whether it be a simple channel like this, or whether it be a pitchfork median line analysis, which I will get to in videos at a later time, is going to be the concept of symmetry. Okay, so the fact that we responded so well to this upper channel extension, this right here is Gulf War actually. The events are really not important, but when it comes to this, we're just looking at kind of the nature of the market and its natural state. And we are looking here at resistance in '05, right on it. You kind of traded above it here in '06, but it would have been a useful point of reference. And then even in 2014, once we finally broke below it after trading, around it for 5 years, that's really when the crisis started in oil and gas. So we just got to that level here. That's why we turned bullish on crude oil, right? We got to this lower half channel extension line, all right? The upper half channel line was resistance. Therefore, concept of symmetry would suggest the lower half channel line would be support. Okay, and indeed it was. So there's that. Now going out even further, the double channel line, or the full, I should say the full channel extension, right? From here, this whole channel line, take the width of it, and you're going to get way up here. That nailed the entire high, the all-time high in July '08. At some point in the future, I have no idea when, but that could be where we go. We could go down to 12 bucks. All right, I do think that we get up into the 30s at some point beforehand, and I'm not too focused on what's going to happen after that at this point. For now, I'm just kind of focused up here. Once we get there, we'll see what happens. But there's more to this. So looking at the channel line stuff is great. Also, I want to show you, this is a chart at commodityseasonality.com. Okay, it doesn't just have seasonals, it's also going to have the contango and backwardation structure, which when you're looking at commodities is extremely important. So commodities most trade in a state of contango because the back month is going to be more expensive than the forward or than the front month or spot month due to cost of storage that costs money. Okay, so usually crude out in the future is going to be more expensive. All right. Well, what just happened here recently is that the degree of contango is so extreme. There's literally nothing, no demand for spot price, so it's so low that it's indicative of a low. Okay. In fact, we are about twice the degree of contango here as we were at the crisis low in 2016. I say crisis low because that was the crisis low in energy at that point, and we're at another one right now. So that is extreme sentiment. You can almost think of it somewhat as as like momentum. In fact, at times you can see how momentum and contango backwardation move together. Okay, typically backwardation, when you go into a sharp state of backwardation, that kind of happens at the end of a speculative bubble in a commodity. Okay, think crude back here in 2013, right? Crude back here in 2014, crude even in July of 2018, before we started really falling apart in the fall of 2018. Okay, and then in fact just recently we were there in January, December and January, fall into the beginning of the year. Okay, we went into contango, which is normal, but contango is so extreme now, indicative of a bigger low, which obviously works so far. So moving on from there, I said we would look at the Canadian dollar as well, and with this we are going to be looking at similar techniques. So this is a daily chart of the Canadian dollar. So remember we talked about with crude oil, I talked about the channel extension, right? So this is a channel from the 2017 low, okay, to the 2000, really, I guess it technically was the December 31st, 2019 low in Canadian dollar and dollar CAD. We're extending that channel here from the December 31st, 2018 high, interestingly enough. And what you get is a channel, the half channel extension, just about top tick that high, all right, from a couple weeks ago. So big resistance there. On its own, that is useful. You're looking for resistance at the half channel extension. Just about nailed it. All right. From here, let's take you to a shorter term chart. Dollar CAD, here's a shorter term chart here. This is a 4-hour chart. A couple things on this. Lower channel lines developed, right? You don't have to sell top tick, okay? You don't even have to sell over here, right? The idea is to identify resistance to sell onto. We now have a lower channel line, and I'm actually looking at shorting a break below right here. So we've now formed kind of a a short-term uptrend line here, and then once it's broken, you have reason to be short that and look down towards lower channel here, 3780 or so, and maybe 3610, which is going to be the 618 of the entire rally from 1231. And then going back to the chart from before, guess what that also is? It's also the center line of this channel from the 2017 low, which lo and behold was actually precise resistance at one point. All right. So I know there was a lot in that video, but I hope you learned something from it, and I hope it can help you, not just in trading crude and CAD, but potentially also, trying some of those techniques, and applying them to other markets. So good luck. Stay safe, good trading, and don't forget to wash your hands. All right, Jamie Setley here signing off. Take care.